Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value, and what I'm doing is I'm looking for undervalued investment opportunities. I'm looking for the best opportunities that I can find in the market. I exploit those opportunities, I invest, I cost average in, and then I hold on. And then what happens is usually that I see many hundreds of percent gains in each of the positions. And maybe not all the positions, but a lot of them. And what that tells you is that you're going after the undervalued opportunities. You're exploiting those anomalies in history. You invest, and then you wait. You make your money by waiting. You make your money by being patient. You make your money by knowing that you are right. And what I try to do on this channel is I take fundamentals, I take valuations, fundamentals, supply-demand balance, and tie that with technical charting. Technical charting will get us our entry points. It'll give you the confidence to see what the market thinks of whatever you're buying. And then the fundamentals are what's pushing these things from the back higher. So I've got a bunch of oil and gas. I'm looking at technical charting here. We've got insane opportunities that are setting up. So number one, I didn't put the ratios on here, but the oil to gold ratio is 30. 30 is extremely cheap in history. That's a buy point for oil. And if you're at 30, we are at the beginning of a commodity bull market. Gold and a lot of these precious metals, they're going to go higher, which is going to force oil to go up even faster, at a faster rate, because oil is going to outperform gold. And it always does during this inflationary market condition type environment. So commodities are game on. Commodities like oil companies and uranium companies, these are the spots that I think that I want to be in because they're going to outperform absolutely everything. Oil usually does the best in these commodity booms. Silver does very well. Platinum does very well. And uranium, energy-related companies do extremely well. And the reason they're going to do so well is that we know the valuations of these commodities are blown out to the downside. They've never been this cheap, ever. So when this stuff rotates and it turns back, we are going to see insane movements. Now, the most difficult part is holding. You have to hold in order to get rich. You have to hold in order to make money. This isn't you dive bomb in, you make 100% and sell. I'm talking about big moves. Change the percent to an X. Not 100%, 100 bagger, 100 times your money. $1,000 turns into 100,000. But the thing is, you have to be able to hold through this. And I've got this channel. Click subscribe. Watch all these presentations. Be able to hold through it. Ask me questions. Put it in the comment section. If you guys need help, put it in the comment section. I will create videos to help you guys out. I want you to be successful. So I'll go on over this presentation. I'm going to show you why oil and gas has been kind of stalled out a little bit. What it's doing. What it's trying to break. And I hold a lot of these companies. I hold all these companies I'm showing you, and I hold more than this. But I'm just showing you the moves and where we're at in breaking big downtrend patterns. The one thing I want everyone to understand in technical analysis and why I do technical analysis is I'm looking for big chart break patterns. Big chart break patterns means that the psychological containment on this price of this stock ceases to exist. It means that it is allowed to go higher and that structurally things are changing and the market thinks that things are structurally changing based off the patterns it's creating in these charts. So I'm going to go in here. I'm going to do some technical analysis on oil and natural gas. These companies are trying to break massive patterns. So I'm going to show you what it is, and I think they're all going to break. I own all of these companies. So let's jump in. This is oil and gas. These are oil investments. Let's take a look at a long-term outlook on oil and see what the charts look like. I think you will like what you see. I sure do. Again, this is only financial education only. You guys are going to have to do your own due diligence on any of these companies that you want to partake in. These are my companies that I like. They are the companies that I chart. They're the companies that I'm using for investments in this next commodity bull market. They are not recommendations. So here we go. This is the price of oil itself. It's on a log scale. I just want to go over the price itself to show you guys what the price is trying to do. This is a long-term chart, obviously, and we're going in this upward sloping channel. This channel is moving higher, and you can see we came up and we created a basically a downward sloping channel or flag pattern, or you could even say this is like a cup and handle almost. It's not, but just graphically speaking, we're coming up and we're trying to break the upside here. Now, if we break this in this next bull market, I think we're going to end up somewhere up here. It could be $200-$300 a barrel. I don't know exactly, maybe even $400. I don't know the top. Depends on how much inflation we have. Depends on a lot of things. But we are breaking this big downtrend line right now. We're trying to break through it. We've got support under here. We got the COVID sell-off that pushed us below this downward channel, which would have been a great buying opportunity. I took advantage of everything I could in this COVID area here. And we're coming on up and we're trying to break this downtrend line. We have a cheap oil to gold ratio. It's at 30. So the valuation's there and the price is starting to move. We just got to break that downtrend line. So let's go with SM Energy. SM Energy is a high debt company. It is very leveraged to the price of oil. Oil moves, $1 or $2. This thing's like massively up percentage-wise. Now, recently, we've seen some moves, and it hasn't moved as much. Like it's stuck. And this is why it's stuck. We're stuck at this big downtrend line pattern. We are coming up. We hit our head on this pattern, this downtrend line, I should say. And we've got a lot of sellers in here. There's a lot of sellers, and we're trying to break through all the sellers. Sellers from back over here, over here, over here. We've got sellers all over the place, and we're up against this trend line. So it's going to take some time. It's going to take some power and energy to break through this big downtrend line. But when we break through it, and you can see the volume on the bottom down here, it is accumulating. I would say massive accumulation in 2020, 2021. And we just have to break through this, and it's going to take some time. If you guys are patient, it's going to reward you. It's going to reward you handsomely. Handsomely, not just a little bit. This is going to throw $100 bills in your pocket continually. Just hundreds, or thousands, or tens of thousands. Depends how much you have in there. But that one's looking pretty good, and I think it's going to break very soon. And you'll see maybe even a run. Here is Centennial Development Resources, Centennial Resource Development. This is another company that I like very much. I own quite a bit in it. I own a lot in SM. I own a lot in CDEV. Why do I own a lot? Highly leveraged moves to the price of oil. This thing is leveraged up. It's got lots of debt. Debt can be repaid very easily if you have a high inflationary environment. And remember, energy is the number one hedge against inflation. Therefore, the oil price has a large inflation component in it. So debt can be inflated away, especially if what you sell goes way up in price. We broke this downtrend, this big downtrend line. It came up. We had the COVID sell-off. We had an opportunity of a lifetime to buy Centennial Development Resources or Centennial Resource Development. Came back up, we broke the downtrend, came back up, and we're hitting this, creating a cup and handle pattern right now. It's going to break to the upside at some point, and this thing's gone. It is gone. It's going to be a great investment for the long term. So this thing's got the chart pattern. It's got the oil behind it in terms of the valuations of oil being cheap. And now it's just a matter of waiting. Centennial Development, great company for a large leveraged move. Here is Callon Petroleum, another highly indebted company that I think is going to be quite explosive. The volume on the right-hand side's buying the living poo-poo out of this. You can see this pattern broke to the downside, and we're coming back up. We're creating almost another cup and handle pattern, and it's got to break through this buying selling zone in here, this resistance. And I think it'll move to the upside and move quite well. Here's Athabasca Oil Corporation, another company I own. I don't chart all these things all the time. Again, I'm a long-term perspective guy. But what do you see here? I see a long-term trend line breaking. I'm seeing this break to the upside. And what do? I bought it down here right at the tip. So we came on up. We created this cup and handle pattern. It broke the cup and handle pattern, broke through its downtrend line. This thing's looking fantastic. Absolutely fantastic. And could this thing pull back to the upper channel or trend line? Maybe, maybe not. Maybe this thing just runs. But this thing looks fantastic. We got the cup and handle break, and the projection of this cup and handle break is probably somewhere in the $2 range or almost $2. So this thing's looking absolutely great. So that's Athabasca Oil Corp. Next, Grand Tierra Energy. I'm kind of going over the ones that we've talked on the channel. We had this support line. It broke to the downside for COVID. Boom. COVID smoked it again. And we bought down here somewhere in a very good spot to be buying Grand Tierra Energy. And what you do here, what do you do? We've got some buyers and sellers up here, came up, couldn't break through this, which is normal. They usually comes back down and creates kind of a handle. It's creating a handle right now. And right now, it's probably a good spot, even at 62 cents. Not a bad area. Create a handle, and it'll break to the upside eventually. Give it time. These things take time. Tellurian, another one. I just threw in kind of this channel in here. We broke to the downside of the channel. The COVID slaughter here came all the way down. Or we came back up. We hit our head on this resistance line. Came back, and we're creating almost a cup and handle pattern. Let it go. Let it be. The volume's there. It's buying it. Let it move. Here's Southwestern Energy. What do you see? A downtrend line break. Big old downtrend line break. And what do? It usually breaks up. Sometimes it rides the trend line for a little bit, and then it takes off. And we're in the takeoff mode, and we just broke out of this little other pattern here to the upside. Let it make you money. Buy it and let it make you money. SWN, I own it, and I'm just holding on. I've owned it since $2.50. So that looks great. Here, Antero Resources, another one. What do you see there? I see a trend line break. It's breaking its trend lines. And that looks fantastic. And sure, this could pull back a little bit. It could pull back and retest this. It very easily could, but on the big picture, it doesn't matter. It doesn't matter. It's a buying opportunity. Buy this stuff, get in it, and hold on. That's what I'm doing. You can see the volume down there, buying it. And there's obviously I didn't chart every single company. Guys, I know you guys want to see all the companies. I have Birchcliff, I have Crew Energy, I've got a bunch of companies up in Canada. They were just dirt cheap. What I did is I buy them, I'm holding on. I'm not selling them. I've accumulated more in actually Centennial Development Resources. I bought a little more there at $3 and something cents, about $4. And I'm just holding. I'm holding on. These things they're gonna appreciate if I got the market conditions right. If we've got all this stuff right structurally, these things are going to kill it. They're gonna kill it. And you just hold. You make your money by holding on. You don't make money by selling at 100% gain. You make money by buying these undervalued assets, waiting for them to become overvalued. How do you know they're overvalued? Look at the ratios. Look at the ratios. Look at the ratios, look at the market conditions, see if those market conditions are changing. If we have a real estate market that's ready to crash, you got to get out. It's time to get out. You get a 1 or 2 year window. We'll see the real estate market starting to roll over. And when that rolls over, when the inventory numbers go way up, all this stuff starts to roll over. It will create a deflationary period. It's a deleveraging on that backside of real estate, and it crashes everything out, crashes everything. And then after that happens, when we go to cash or bonds at that time, if we can make it and not have some hyperinflation or something, we want to go into cash. We let the whole market crash out, and then stocks are the spot you want to be. Because when you're in a recovery phase of real estate, stocks are the spot to be. We just ended a recovery phase of real estate. Stocks did incredibly well from 2009, 2008, 9, all the way to 2020. Now it's an expansionary phase. It's the inflation phase that's coming. That phase, commodities blow up. They love this inflation phase. So if you guys like this type of analysis, give me a thumbs up, subscribe to the channel, and thank you for listening. This is Finding Value.